G'day everyone, welcome back to Pete's Investing, June 14, 2023. This is the Aussie New Zealand currency update. On our weekly, we're in a bullish momentum, but on our daily, we've broken down into a neutral positioning. And you can see there we've got a couple of, on a daily, we had a divergence that worked, and we covered that in the last video. But on the hourly, we demonstrated a bearish divergence, and that's actually broken out into a short positioning. So we'll cover that in a second. First off, on the weekly, you can see there our triple moving average of the price chart broke above this diagonal trend line, and likewise the CCI 150 moving averages also moved to the upside, and that's giving us this bearish momentum. So primarily bearish, bullish momentum, primarily bullish trades only. On the daily, again, those moving averages are not aligned 100%. The CCI is broken to the downside, although the moving averages of the price chart are still bullish, so it's giving us a neutral positioning. So we'll see where that goes in the coming hours and days. But we did have a bullish divergence here on the CCI, and we drew a bearish divergence on the price chart at that point, and it broke above that trend line. That's where you would have entered, and our initial target area was hit. It actually went into our secondary target area had you place another target area above that. We usually pick two target areas. In this case, it hit both of them, but we always pick the initial target area as a more confident, higher probability of success if you want to reduce your risk. So that daily divergence worked out quite nicely. On the hourly, we did draw this bearish divergence versus a bullish divergence on the price chart. And you can see there we did, in the last update, we did draw the channel where it had to break below, which it did in the last few hours. And we drew a Fibonacci retracement between that low and that high, and that's our initial target area. So that's currently in play. What's happened now? That's currently in play, and it's halfway down. So we always put it down to the nearest Fibonacci level outside of the current Fibonacci level for a, as I said earlier, for a more higher probability of success. If it breaks below that, then potentially it could even go a bit lower, but that's our initial target area for the moment. So I'll see where that goes in the coming hours if that hits our target. Also, longer term, you can see there we've got a bullish backtest and a bearish backtest, and a way to avoid the averaging down. You can see they're averaged down a couple of times. We don't use stop losses. As I always say, always trade in direction of the weekly and the daily indicators. So for example, back here when the price is going up, you would have done primarily bullish trades when the weekly and the daily are aligned. You can see there those bullish momentum indicators, and since then you would have not taken those long trades, and you would have taken short trades during that period where the daily and the weekly are aligned on the bearish side. So again, to understand that and other trading strategies, subscribe to my Patreon page where we also do some weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.